All right, folks, welcome back to another edition of Matt and Andrew's Real Estate Market Update video. Today is June 5th. We took a month off for the month of May, just had a whole bunch of stuff going on. Got pretty busy. Despite what you might be seeing in the news, it is still a very busy, competitive market. And so anyways, now we have May numbers to share with you for our June update video here. So Andrew, you also had a birthday recently. How was that?
It was excellent. Yeah,
Good, good.
I'm on
Um,
the back half of my 30s.
yeah. I guess we're both looking at that now. Life is a little different. Oh, there's your cat.
There she is.
Making an appearance. Yeah, I have the door shut in the office, so my cat will not be making an appearance. Which is good because she would be in my lap. All right, so first thing we're going to do just real quickly, I'm going to put up here on the screen some market update numbers. These are coming out of the MLS InfoSparks stats tool. So if you're looking at infographics on social media from other sources, maybe the numbers don't match up exactly, but they should be pretty close. Most of the property sales are in the MLS, so I'm trusting that the MLS stats tool is going to provide some accurate numbers. Through the month of May 2024, average sale prices, those are all up. St. Louis County, St. Louis City, St. Charles County, Jefferson County, St. Louis County average sale prices for May, it was a little over 382. The city, 248. St. Charles, over 404. Jefferson County, 290, almost 294 there. So sale price averages continuing to go up. All those people who said that prices are going to go down, we are not seeing that. Number of new listings, those were also up May 2024 compared to May 2023. St. Louis County was up over 7%, City up almost 8%, St. Charles up almost 14%, Jefferson County up over 14%. I think a topic that we were talking about on our previous video was, people have just gotten used to the rates. The rates are where they are. Prices have still gone up despite the rates, and we haven't seen much movement. And Andrew will get into it on the rates, but people are just like, it is what it is. We still got to buy a house. We still need to move. So we're seeing a lot more new listings this year compared to last year for the month of May. Now, pending sales, though, the number of sales that are going under contract, that is down. So I do think the affordability issue for buyers, the inventory issue across a lot of different markets, and interest rates and sale prices and cost of living things have caused our number of sales to go down. So St. Louis County for the month of May was less than 1%. St. Louis City was over 14% down. St. Charles about 1%. Jefferson County down about 6.2%. So we are seeing a little bit difference there. Month supply. So month supply, that's a stat that measures basically whether it's a buyer's market, seller's market. In order to get to a buyer's market and kind of like flip the trend, we got to get to 6 months of inventory or more. Anything less than 6 months is considered a buyer's market. And when we look back at like 2021, when we were in like the heat of the market, months of inventory was effectively like zero for most market areas. So anyways, St. Louis County, it's at 1.4, St. Louis City, 2.7, St. Charles, 1.9, Jefferson County, 2.2. So again, when I say 6 months of inventory is what it'll take for us to get to a balanced market or a buyer's market, we are still a long way off from there. Now, we're going to talk a little bit more on the price cuts later on in the video, but a lot of headlines about price cuts. So, sellers slashing their asking price on their listings because they're not getting buyers to bite at their initial listing price. Percentage of list price on closed sales for the month of May, it was down in every county compared to May 2023, but the averages are all still above 100%. So St. Louis County average, it's 101.9, City 100.2, St. Charles 101.7, Jefferson County 101.8. And the other thing too that we're seeing that is down across all of the counties, the number of showings per listing. Again, buyers are getting hit with the affordability issues, high prices, interest rates, and cost of living things. So the number of showings we get per listing is down. So St. Louis County down 18%. City down 22%, St. Charles down 31%, Jefferson County 6%. So that's kind of the market we're in. It is what it is. Prices are still going up. There are still a lot of buyers out there, but we are dealing with some affordability issues. So those pending sales, the number of buyers out there showing each listing, those things are down. So that's it on our market update. Andrew, next, do you want to dive into the rate update or your kind of mortgage market update?
Yeah, absolutely. So May was kind of an odd month. So, basically, we've been talking in past videos about how many cuts this year, when they'll be, talking about economic data that was coming in to support whether the Fed should start cutting or not. There was, I'd say about mid-May, some sentiment came out. It was almost a sure thing that we were having at least 1, 2, possibly 3 cuts before the end of the year at the time of our last video. Well, then the sentiment kind of shifted based on things that the Fed was saying, Fed members were saying, that they were even not ruling out a hike before the end of the year. So that kind of put the trading in a tizzy. The mortgage-backed securities, we lost a lot of ground. But in the last couple of weeks, the sentiment has shifted again that we will see cuts before the end of the year, and we're kind of right back to where we were in April. So, but we've been trending in the right direction. Right now is kind of the calm before the storm. We have the BLS jobs data on Friday, and then next week's inflation data Fed meeting. So we're trending in the right direction right now. And if you are under contract on a house, then you're kind of maybe waiting to see whether you want to lock that rate in. How risk averse are you to see what happens at that Fed meeting next week?
All right, cool. That's awesome. Yeah, no, rate cuts, rate lock-ins. I'm glad you brought that up because that is, a question that a lot of buyers has as rates are fluctuating up and down, and there can be some uncertainty. And that's a question that a lot of people ask, especially when they've got a long contract to close timeline too. Yeah.
And little known fact, they actually are better 15 days out. So for example, I have one closing early July, like July 2nd. Well, if I can, I'm gonna wait till I'm inside that 15-day window, but we've also got this Fed meeting. So it's kind of a conversation with the client. How lucky? Do you feel lucky?
Yeah. Well, yeah, no, just staying on top of the day-to-day market updates. That's the advantage of working with people that work in this business full time and have got their finger on the pulse of everything on a day-to-day basis, rather than somebody who's, just part-time or just, only passively in the business. So pay attention to that. All right, our next topic, we've talked a little bit about it before in previous videos, but the real estate industry is going through a little bit of a shake-up thanks to some of the lawsuits going around the country from home sellers and home buyers against the industry, as well as from government regulatory investigations on the part of the Department of Justice. This summer, coming up in the next month, we're going to see some changes in the St. Louis marketplace. One change we've already seen is When you are a buyer and you're going to be working with a buyer's agent, you got to do a buyer's consultation up front. You need to be guided on the process from start to finish on how everything works. So that's something that's already been gone into effect for agents in the St. Louis marketplace. Also, you've got to have a buyer agency agreement signed before that agent starts showing you properties. So that is something that your agents should already be doing with you at this point. Now, what is upcoming? The MLS will no longer display any commission information shared from the listing agent being offered to buyer's agents. So as it is now, buyer's agents, when they're coming through the MLS, they can see the commission info for each listing that their buyer may be interested in. And that commission data has been shared to like third-party public-facing websites too. So if you scroll down on those websites, you would have been able to see that commission data. Well, pretty soon here, that commission data is no longer going to be available on the MLS or on those public-facing websites. And your buyer's agent for every property that you are interested in is going to have to contact that listing agent to find out what commission is being offered, if any, because sellers are no longer required to offer any sort of compensation in order to get their listing into the MLS system. So as a buyer, you and your agent, when you are doing that buyer consultation, your buyer's agent should be explaining how the commission works and these new commission rules and commission possibilities. So that way, before you go out there and you start looking at properties, you know exactly how the rules work and what you might be facing case by case, listing by listing. As a seller, when you were meeting with a listing agent to list your home, instead of deciding on one total commission that then the listing agent is just going to break off and give to the buyer's agent, you and your listing agent are going to decide on the commission for the listing agent and their brokerage, as well as what compensation you are willing to offer to the agent and their brokerage representing the buyer. Now, going forward, for buyers, like I said, the agent is going to have to contact each listing agent individually to see what commission is being offered. If there is no commission being offered on your offer, so when you submit your offer to the sellers via your buyer's agent to the listing agent, or if there is a commission being offered, but it's maybe insufficient for your buyer's agency representation, you can ask for a credit on your offer to be basically credited an amount of money from the seller to be used towards that commission towards your buyer's agent. So you can use that strategy if there's no commission being offered, or if it's a small commission that's insufficient for your agreement with your buyer's agent. If there is no compensation being offered from the seller to the buyer agent, or if they refuse to give you any sort of credit as part of your offer to apply towards that buyer's agency commission, then you, the buyer, are going to be on the hook to figure out of pocket how you can afford to buy that house with your buyer's agent and pay that buyer's agent at closing. So that's going to be the rule changes. So far, basically all the agents right now, we're just getting trained on these new contract forms. And basically end of this month is when those things are going to go into effect, and we're going to have all new forms that the agents are going to have to use. So if you're in the market or you're about to get into the market, be prepared for these changes in the commission business practices for listing agents to buyer's agents. All right, so next, Andrew is going to go over, just as a little reminder, information on seller concessions, because seller concessions from a seller to a buyer to pay towards a buyer's agency commission, that'll now be part of the contract. And if you're using a loan, you want to know what those commission rules are, or sorry, the concession rules are for how much credits you can get. So Andrew, I'll let you take it away. All right, Andrew, just real quick, but I don't mean to cut you off, but before we get into the talk about the concessions, I just want to point out that back in April, Fannie Mae and Freddie Mac, they issued guidance that the buyer agent commissions, should a buyer have to ask for a credit from the seller for the purposes of applying that money towards their buyer agent commission agreements with their buyer's agents, Fannie Mae, Freddie Mac, they are not going to count those buyer agent commissions on their caps that they have currently on seller concessions. So you're going to go through all of these seller concessions and how much you can get based upon your loan type, your down payment amount. But just before we get into that, just wanted to let people know that the buyer agent commissions, if they are exchanged as a credit from the seller to the buyer at closing, they will not count towards that cap that Fannie Mae and Freddie Mac have for those seller concessions. So anyways, proceed, Andrew.
Yeah, absolutely. So seller concessions come in a few different ways. Historically, as you mentioned earlier, in more of a buyer's market when we have over 6 months of inventory and there's buyers have a lot of options as far as which house they're offering on, you might offer a seller concession to attract a buyer. The other scenario would be rather than dropping the price of your house, maybe try offering that to attract a buyer. So with a conventional loan, it just matters how much you're putting down. You can get as much as 9% of the sales price towards down payment, closing costs, and any discount points. That's with 25% down. 6%, you can get up to 6% with 10 to 25% down, and 3% if you're putting 10% less than 10% down. FHA is a flat 6% seller concession across the board, no matter how much you're putting down. VA is actually unlimited, with the caveat that if you're included any debt payoff at closing, they'll cap it at 4%. And then USDA, the max seller concession allowed is 6%. And I should also mention an interesting thing: you can even get up to 2% seller concessions on an investment property with conventional. If you're putting down 15% or more.
Okay. All right. Yeah. So that's good to know because there's plenty of people out there that are trying to grab up investment properties too, not just all the owner occupant demand out there. Yeah. All right. So Andrew's also going to cover some industry announcements relating to some of these interested party concessions and seller concessions. So Andrew, I'll let you take it away.
Yeah, so there's been some headlines. You may have seen some of them recently. They can be a little bit misleading and clickbaity, stuff like the VA prohibiting uh, buyer's agent commissions to be paid. So I just wanted to clarify that that rule has always been in place. The recent changes to as a result of the NAR lawsuit and the contract changes that you were going over. Now we have to change our rules. And the VA is run by the government. It's about equal access to affordable housing. That they're very structured to protect those consumers. So this is just something they are not going to leave them out on a limb and put them at a disadvantage. It goes against the entire thought of the organization and what they're about. So what happened is they came out and they said, hey, look, because of this, we got to get together. We got to talk about the new rules. So they're going to be coming out with, by June 12th, a circular to address this while the formal rulemaking process occurs.
All right, little news break. Since we recorded this podcast video on June 5th, and before we are publishing this, the VA has issued that temporary fix to allow the buyer to pay the buyer agent brokerage fees. So, Andrew, in this the segment has been talking about how that announcement is going to come from the U.S. Department of Veteran Affairs, or VA as we call it, but it has now come since we recorded the video. So I'm interrupting this video just to announce that news that the VA has issued the announcement on that fix to allow buyers to pay their brokerage fees. So carry on. Another thing I just wanted to touch on real quick, you may have seen on the news, going back to comments about clickbaity headlines. Talk about sellers across the country slashing their home prices. A bunch of those headlines, Fox News, Forbes, Washington Post. I mean, the list goes on of the mainstream media outlets that are reporting on it. It comes from a report from Redfin, a real estate company that does a lot of data analysis. They released a report the end of May, basically stating that 6.4% of home sellers cut their asking price basically during the month of May. Which is a lot. It's basically the highest number since November of 2022. And if you think back to November of 2022, that's when rates were really starting to spike up. And the seasonality impact, you get a lot of people that are desperate to sell their homes in those winter months. So rising rates and seasonality impacts, you had a whole bunch of people slashing their prices back then because that's when rates were starting to spike. So now this past May, it was the most basically number of home sellers that cut their asking price since then. I mentioned at the beginning a little bit about the number of like the percentage of list price that we were still getting in the month of May here in the local St. Louis market. Every county on average was over 100% sale price to list price ratio. So when you see the headlines about these sellers slashing their prices, it's not the full story. There's still lots of sellers that are getting their asking price or more. A lot of cases, they're getting more. And really, that comes to my point of uh, don't price your house with, some people have said, meat on the bone for buyers to haggle over. Like a seller said, I need to get this, so I'm going to list up here and I'm going to leave this room here for us to haggle over. Don't do that. You're better off with the lopsided ratio of buyers to sellers we have. You're better off basically pricing it fairly or a little bit under what would be fair market value, depending on buyer search increments, depending on other competing listings on the market at the same time as you. You're better off pricing it there, getting a whole bunch of buyer activity, and then allowing those buyers to then dictate like what they're willing to pay, as well as not just what they're willing to pay, but also what other terms they're willing to cut out of their offer in addition to that amount they're going to pay. So for those sellers that are facing a situation where they're slashing their asking price, A, there's not that many of them, so don't get too wrapped up in the headlines. And B, I think this is a lesson for some sellers on not getting too greedy and going with more of a strategic approach on their initial asking price.
That's why you hire a good agent to
Yeah,
help
that's why
guide
you
you through
hire,
this.
yeah, you hire a good agent who can tell you, a good agent in the St. Louis marketplace should be able to tell you, they should be able to call other listing agents for recent listings to say, hey, when you put that on the market, I saw it sold in 3 days. How many offers did you get? They should be able to go into showing time and download a target market analysis report that shows how many showings per price increment in the past 30 days, the past 60 days, 90 days. So they should be able to educate you on all this. And then, the point about the search increments, the lower the price point, the lower the search increment for those buyers. So somebody who is, maybe has a max of 200,000, they may be adjusting their online search increments by 10 to 15,000. Above 200,000, you're probably looking at people that are searching in $25,000 increments. And then the higher you go, then it turns into 50,000 increments, 100,000 increments, 250,000 increments. And so intelligently putting your list price below, like just at, or maybe a little bit below where you think it'll sell at, as well as getting it listed within a search increment that is going to get a lot of buyers' eyes, will lead to a lot of buyer activity. The buyer activity will lead to hopefully multiple offers that not only drive the competition to getting the price that your seller wants, but also maybe getting other terms that the seller wants too. So
That's
that's
interesting. I never thought about that.
yeah. I mean, I am a big believer on the search increments being a huge factor in how many buyers you're going to get in the door for showings. So often overlooked, but I think it's a huge factor because what, like 95 to 100% of buyers are using some sort of online
It
search tool.
makes sense to me.
Yeah. Yeah. So, an example would be like, I think this house will sell 405 or 410. Well, if I listed it at 405 or 410, then all those buyers that were looking up to 400, they're no longer seeing it. So I'm better off listing it right at 400, even though I know it's probably worth 405, 410. I'm not going to shoot myself in the foot by starting the listing price just a little bit more. I'm better off just dropping it down to that 400 max and then getting all those people that are looking up to 400 as well as the people that are looking above 400 to all see it. So that's just an example. All right, Andrew, anything else? That's our wrap up on our June video here.
No, thanks for joining us.
All right, thank you, everyone.